Hey traders, it's Alex from Edge-Forex. Grab your coffee, your chart, and let's break down what's happening with gold right now. Alright, so first off, we're looking at a textbook bullish regression channel. Gold's been following this channel like a kid on a sugar high running between his parents. We've got the price bouncing beautifully between the upper and lower lines like it's stuck in a pinball machine. Now let's talk about where we are right now. We're kissing that upper band, the one that acts as resistance. So what's the game plan? Well, one of two things will happen. Either gold busts out of this resistance like a rock star escaping a bad encore, or we get the good old pullback. You know, the one where gold says, "Hold up, I need a breather," and it dips back down to the middle or lower edge of the channel, setting up a solid buy-the-dip opportunity for you smart traders. But hey, it's not all about the lines, right? Let's zoom out and add in the spicy real-world stuff that's pushing this bullish bias. First, we've got Middle East tensions adding some real heat to the safe haven assets. Gold loves drama, and when things get hot on the geopolitical front, traders flock to it like moths to a flame. This is one of those crisis equals profit moments. The more chaos in the headlines, the more those gold bars glitter. And let's not forget the US. Political chaos is basically on autopilot now. The government's been through more shutdown threats than I can count, and we're looking at a circus of election craziness coming up. Oh, and then there's that looming recession, just kind of waiting in the wings like a bad horror movie sequel. Meanwhile, on the monetary policy front, the ECB is considering rate cuts they said they'd never do. Yeah, flip-flopping like a politician before election day. But let's be real, rate cuts are like steroids for gold. Lower interest rates mean cheaper money, and when money's cheap, gold loves to shine. So the ECB and the Fed are basically doing gold's PR right now. Every cut is another tailwind for that price action to keep moving up. And speaking of rate cuts, let's not forget the Fed. Powell's got more on his plate than a Thanksgiving dinner, and the whispers of more cuts are getting louder. The bond market is throwing a tantrum like a spoiled kid at the candy store, and gold's over here just soaking it all in, ready to take off. Now, let's check in with our buddy, the RSI. Sitting pretty at around 63.65, which basically means, yeah, I'm strong, but I'm not overcooked yet. It's like you're almost done grilling a steak but still got some time before it gets well done. But if we push that baby up past 70, well then we're in overbought territory. And that's where things could cool off. But for now, we're still cooking. So here's the deal. If we get a pullback from this resistance, don't freak out. Look at it as a chance to reload and get back in at a better price. Remember, pullbacks are just pit stops in the race to higher highs. And if gold busts through this upper band, well, get ready for fireworks. This thing could run faster than a politician dodging a debate question. Here's the kicker, with everything going on, from global tensions to monetary easing to political chaos in the US, we've got a lot of wind in gold's sails right now. This bullish bias? It's got some serious legs. I'm talking marathon, not a sprint. So, whether you're trading the breakout or waiting for the dip, this is one of those times where patience, precision, and a little bit of risk-taking can pay off. Just keep an eye on that RSI and the real-world headlines. It's all connected. All right, traders, that's your breakdown for today. I'm Alex from Edge-Forex, and remember, we trade together, we profit together. No fluff, no nonsense. Let's get back in there and make some smart moves. Catch you in the next one.